Hello and welcome back to another week of your Mortgage Market Movers Weekly, where we are detailing everything that's going on in the macroeconomy to help you make better home buying decisions. This week's 30-year fix is sitting at a 6.58, which is up from 6.55. This week we also have the big FOMC meeting. If you aren't familiar, this is where the Fed get together and decide the Federal Reserve rate. It's expected to be a pause this week, but anything can happen. The big thing that we want to pay attention to is the press conference that occurs Wednesday at 2:30. So we're going to dive into exactly everything else that's been going on in the macroeconomy, what's coming up next week, and what happened last week. So let's hop right on into the charts. So we are on the U.S. 10-year yield chart, and it's not the best. So a while back we were talking about this 4.5, and the 10-year yield was kind of dancing around this place right here, this this number. And it has broken up above, and it has sustained there for a little bit now. So not great for the interest rates. As we know, the U.S. 10-year yield is kind of like a proxy for the 30-year fixed. And it's just not looking too hot. We've climbed above this threshold of the 4.685 number and came down a little bit. Almost looked like it was going to come down, but shot right back up. And this is probably due to renewed tensions in the Strait of Hormuz with the MOU, Memorandum of Understanding, being called off. So Iran has closed once again the Strait of Hormuz, and oil is climbing up again. So let's see, we can look at oil and we can see climbed up. Now it did back off today. I think that there have been talks of a potential deal happening, so who knows what's going to happen, right? Because it's kind of deal on, deal off. So we really need to get something concrete. But part of, even though this, if we, let's see, we can compare these two charts. So if we compare the 10-year yield with this chart of crude oil, we saw this big peak back in April. This was when Strait of Hormuz first closed, and then this was back in April. Probably pretty crazy tensions, and then they died down, and it's kind of been, like this downward sloping thing. Oil will come up, but not quite as much as last time, and we see that happen again right here. And this was the latest closing of the Strait of Hormuz. So I think what's happening here is investors just don't know what's happening. We've seen that inflation isn't as bad as we believed it would be, and we'll get into that. We can go and look at the inflation numbers from a few weeks ago, and inflation wasn't as bad as was once perceived. But I think investors are still just kind of concerned, and they don't know what's happening. So any kind of uncertainty in the market, these investors are going to want to hedge on the safer side of things. And, with deal on, deal off, we just don't know where inflation is actually going to be. If inflation is sustained, because oil does happen to climb back up higher, then investors aren't going to want to buy into the bond market. And when they don't buy into the bond market, the yield has to come up. They are negatively or inversely correlated. So let's see. Like I said, with inflation numbers, they were actually pretty solid. So this month over month, this is July, so this is going to be for June's numbers, year over year. These things were good. This is the consumer side of things. Everything was better than expected. And then the producer side of things, everything also was better than expected. So I think it's really just understanding moving forward, right? So inflation didn't hit as hard as we thought it would. Inflation is still up, don't get me wrong. And we can take a look at I'll search for the Fed expectations, the market expectations for rate cuts and hikes, and we can take a look at that. But yeah, inflation was better than expected, but it's still high. This still 2.6 is still higher than the 2% target for the Fed. So I think a lot of the Fed members are reluctant to want to cut any kind of rates, which, that's not going to directly impact the mortgage interest rates. But what it says is it's just, there's so much uncertainty in the market right now about just what's going on. The investors just don't really know if this is going to be a sustained problem. So this week, really big thing is the FOMC meeting. It's expected to be a pause for the federal funds rate. So no hike or rate cut. That doesn't mean that it can't happen. It's just the expectation is that there's going to be a pause. And then we will get their statement and then a press release with the new chairperson, Kevin Warsh. This will be his second press conference. After that, we have GDP on Thursday, core PCE price index, unemployment claims. See how personal income and personal spending are. That's related to microphone might have cut out a little bit, but that's related to housing. Right? We want to see personal income not drop too low. People need money to buy houses. And then the following week, we have, this is probably going to be important, the labor data. We want to see what that's looking like. So ADP non-farm employment change and the JOLTS job openings. Challenger job cuts might be interesting. Unemployment claims. That's what's going on the economic calendar. Like I said, 6.58 up from 6.55. This has just been climbing. We saw a little bit of a dip in April, but just climbing. And that's, reflected in the U.S. 10-year yield. February, in hindsight, it's always 2020, but February would have been a pretty solid time to refinance or buy. But you can't time the market, right? So, if you're going to buy a house, and anecdotally, I definitely have seen, a good bit of purchase activity going on. So it does seem like, at least here in Jacksonville, Florida, the market is still fairly healthy with people buying homes, people selling homes, homes not sitting for too long. I did see a thing, and I need to look into this. It was on social media, that foreclosures are pretty high in Florida. So I don't know. Maybe that's something we look into next time. Let's see. Fed expected rate cuts. Let's see if this will give me what I'm looking to. Let me see if I can find it real quick. Will this take me there? This is the FOMC minutes from June. Maybe if I go to monetary policy calendar. Dang it. Okay. 26? No. It's, I don't know. We'll take a look next week, but I guess it doesn't really matter too much right now. Well, I guess it is good to compare, but anyway, it might be better to look next week anyway after Kevin Warsh has had his press conference. But that's all I have for you this week. So if anyone has any questions, comments, concerns, reach out to us at 877-TEAM-MBL. Give us a call or visit our website at www.mortgagesbylinda.com and connect with us. All right, everyone, have a great week. Bye.